Hello traders, this is Mario Satino from FinMarket. Let's begin our webinar for the day. This is a non-farm payroll webinar. If you please go to your chat and write me if you can hear me well, it would be very helpful for me. So you can do that, go to the chat, just write me sound okay. Right, I reckon that you can see my screen. So let's start. This is the webinar non-farm pay for the non-farm payroll, the most important report in US. Before we start, I'd like you to read our disclaimer. Take a moment, please read it through, make sure that you understand what we are stating here. So pretty much what we are saying here is that any opinion from me is not going to represent in any way an investment advice that's made by FinMarket. Now, past performance is not a reliable indicator for future results, so bear in mind. Also that trading with a leverage, it's considered to be high risk, so have that in mind. Now, I'd like to introduce myself to you. If you don't know me, I'm Mario Spinodoro, I'm the Chief Market Analyst here in FinMarket. I started back in 2012. I coach people. I write in Yahoo Finance, FX Street, Nasdaq, FX Empire, and so forth. I've been working with a number of Wall Street traders out there, and we did a lot of stuff together that formed my experience for the market. Basically, my market approach is based on price action and market psychology. But for today, we're going to go through the non-farm payroll, the most important report that comes out every Friday, every first Friday of the month in the US. Now, objectives for the day are non-farm payroll, why non-farm payroll is important, what is this non-farm payroll, what are the reports, data processing, the EDP, unemployment claims, average hourly earnings, unemployment rates, the employment situation report background, NFP, and NDP all together. Now, what is non-farm payroll? Basically, some data estimation that comes out from the US with the total number of paid workers in non-farm business establishments and government agencies in the US. Now, this also holds unemployment rate and also the average hourly earnings is included as well. Now, because employment, it is a leading indicator for the markets and consumers, and it is also a consumer spending estimate. That will form the consumer confidence, which is going to give us a sense of how the market will and is going to react and before the event reacted. The NFP figures basically are strictly followed by markets and the market participants and regularly cause a huge volatility in the markets. So pretty much, guys, you need to understand that non-farm payroll is considered to be one of the most important report followed. Bear in mind that the reason we call it non-farm payroll is because the payrolls are determined by the jobs that are included in agricultural workers, that are included agricultural workers, and those that are employed in private households or non-profit organizations. Now, the non-farm payroll data basically is published every first Friday of the month, and it's considered again to be one of the most important reports out there. Now, why non-farm payroll is important? Now, why this report matters is because non-farm payroll releases are basically an essential tool that basically is neutralized to manage the overall threat of the economy. It's pretty much showing us how the economy is progressing, because you obviously gonna see how the employment rate is completed, how many released, how many reports are on the positive side, and this total report, the total of this report is accounts basically 80% of the workers who produce the entire GDP of the country, of the United States. So it's really important, because 80%, guys, is more than enough to make a sentiment of how at least the preliminary numbers are going to be unfolded for the next month. Now, let me give you an example for you to understand what's going on with these numbers. Let's say that the NFP appears to be better than the one that we forecast, okay? Then I believe that will be the risk appetite of the traders and the market participants that are going to take over non fundamentals. Means that the eager to get into the market, the anxiety, and all of this is going to be the ones that's going to take over, rather than the actual fundamental numbers that are out. This suggests that we might see both Euro USD and GBP USD on the positive side, according to what we've seen as far. It's not a rule, it's just a guideline. It's nothing, it's certain in the market. Okay, it doesn't mean that if the forecast is better, then these two pairs are going to go up. You have to understand that there are other fundamental structural reasons that are there to press the market or push the market. So it's not only the report that makes sense for the market to go up. A weaker figure, on the other hand, could possibly press the risk appetite and cause the pairs to drop. So as you can understand that the numbers, when they are out, they comes with an extreme effect in non-payroll. Okay, if the market are positive, everything's going well, we suspect that the price is going to be on the uprise. But if, on the other hand, the numbers are not as predicted, so the pairs probably going to drop, because the risk appetite of the market is going to be pressed, and that is because of the market psychology reaction. That's why normally when we see the participants go into the market, normally we say that pretty much the most amateur are going first into the market, and then the institutions and the most experienced traders keep in, because, guys, you have to understand that most of the times price digest the fundamentals, and it's already priced in the market. So we pretty much at that time, at the event time, we pretty much trading other people expectations, okay, not basically the numbers that supposed to be there and drive the market. That's why when the forecast is better, the anxiety kicked in. Now, what are the non-farm payroll reports in detail? Basically, statistics from non-farm payroll further show that better which sectors are creating most employment additions and which one is concentrated in large gains or losses. Okay, it makes sense. If we have more people coming into the work, okay, into the industry, means that the economy is considered to be on the positive side because we are hiring. Now, the list of sectors from the report includes professional and business services, healthcare, financial activities, mining, construction, manufacturing, wholesale trades, and so forth. This breakdown is usually used by stock analysts, keyword is the stock, yeah, to predict, okay, which stocks and sectors have front earnings report. Now, many analysts have found different ways to implement some strategies in order for them to trade. One of the strategies they use is to see this breakdown and form some kind of sense how the market will react on the stock sector. Because, guys, makes sense again. Okay, if this thing is giving us a sense of how the economy is going in general, and specifically if the general sector gain employment, means that those companies are going to be on the bullish side because they are hiring, meaning that their sales are going good. Well, I don't know a company that is going badly and keep hiring. I mean, makes sense. That's why you need to understand that most of these things are pretty much common sense. All right. The report also contains the average work week, average hourly earnings, and wage growth. Each month's report may include revisions. Okay, so we have also some revisions. We need to study those as well. We're not going to go into the revisions right now because we don't need it. We only need to see the general sense on how market is acting. Now, the best month for wage growth usually is considered to be May, okay, with an average 1,029 additional jobs. Now, the August supposed to be the worst one, so pay attention to these months, okay? We have an estimation of how this works. It has to do with the seasons. Now, the year 1994 was the best record. We have 3.85 million added jobs. That was a great year. In 2009, the jobs force lost 5.5 million. So you can see how extreme this can become. And in 2013, payroll employment growth total 2.1 compared with a gain of 2.2 million in 2006. That's for reference, means that sometimes you see extremes happening according to some of the events that are happening all around the world. Now, NDP, what's that? Okay, let me explain what's that, because that is important as well. It's an estimated change in number of employed people during the period of month, excluding family industry and government. Makes sense? The data provides early look employment growth, usually 2 days ahead of the government release employment data. Non-farm. Basically, it's a preliminary report that comes out before the non-farm, which is giving us a sense of what's going to happen. Okay, NDP basically analyzed the payroll data from more than 23 million workers, and it's considered to be pretty much 5 to 70% accurate. Okay, so when we expect to see the non-farm payroll comes out, the ADP is the one that is going to give us a preliminary view of what is going to happen with the actual non-farm payroll. So pay attention to ADP. It comes out normally on Thursday. I believe this thing it will help you gain some of the momentum that you need before the non-farm payroll. Unemployment claims, guys. The number of individuals who filed for unemployment insurance for the first time during the past week, that, although it's generally viewed like a lagging indicator, means that it's behind the events. The number of unemployed people is important because you need to know how many of these people are unemployed. Okay, and that's going to be the signals of overall economic health, because consumer spending is highly correlated with the labor market conditions. Means that, let me give you in plain English, unemployment means that people are not getting jobs, and the economy is considered to be contracting. Okay, why we have so many unemployment? Because businesses are shut down, the economy cannot support those businesses, and the unemployment is kicked in, and then the government needs to pay all these guys to survive. So it makes sense. Again, it's some things that you already know. It's not something complicated. Now, unemployment is only a major consideration for those who steer in the country's monetary policy. Also, people that are basically the heads of the economics in one country, like the Ministry of Finance, they pretty much see some of these reports to form the monetary policy, like Christine Lagarde, for example, or the Fed in US. They monitor these reports to see how they're going to react, considering that they have so many or they don't have so many unemployment. Average hourly earnings and unemployment rate. Okay, so what's happening with this? The average hourly earnings, basically month to month, is a change of the price of business paid for the labor, excluding the farming industry. Okay, it's a leading indicator of consumer inflation. When the business pay more for labor, the higher cost usually pass to consumer. Means that if there is a consumer inflation in place, business are paid the labor higher salaries, but they need to make back those monies. Okay, so those money are considered to be at up to the prices of the goods, means that you go and buy stuff in a more expensive rate. Okay, so that's why you need to also have in mind that these things are important to watch in correlation with the non-farm payroll. Now, unemployment rate percentage, unemployment sorry, is the percentage of the total workforce that is unemployed and actively seeking employment during previous month. Okay, it makes sense. The unemployment is the rate that basically it's measuring how the workforce, what was the total workforce of the previous month. Although it's generally viewed as a lagging indicator, that one, the number of unemployed people is an important signal of overall economic because the consumer spending again is highly correlated with the labor market. Now that's again a thing. The rate is a thing to watch to form an opinion of what's going on with the unemployment rate. Now, let's see the coincident labor market statistics and stuff. Non-farm payrolls basically give the most encompassing image of the US job markets, but so also three other statistics that are very useful. We're not going to go into everything. We're just going to go again on the initial ones, which is the NDP, initial jobless claims, and the unemployment percentage manager indexes. That's basically some of the reports that are accompanied with the non-farm payroll. Now, the ADP, because I want you to know that, are based on its 411 corporate clients, while they covering some surveys to see what's going on with the numbers that they want to come up. So basically, guys, if you want to follow the non-farm payroll in its full, you need to also understand that you need to follow the other reports that they comes out, like the ADP, which is before the non-farm payroll. Let's go to the meat of this presentation, and let's see some of strategies that we can pretty much implement when we have these moments kicked in the market. So let's say that we want to use for this. Let's say that we're going to use for this NFE some kind of a strategy that will give us an edge. Okay, let's put Bill Williams alligator. If you don't know that, we have a webinar that it's recorded. You can ask for it. It's very good for you to have. So let's see, for example, that we have an expectation of the market reaction. Pretty much what the study states is when the price is below the alligator, the 3 moving averages, okay, we sell. When the price is up, we pretty much buy. This is according to Bill Williams. Let me add something to this, and let me say that, let's say that this is the day of the non-farm payroll, it's a move of the Euro USD now, okay? Let's take our Fibonacci retracement tool. It's here in MT4. Let's draw it from down to the upside. We're gonna see that we have some kind of support and resistance level. And let's see that let's suspect pretty much that the price will drop. Say this is the day on the non-farm payroll. Okay, the price dropped below the moving average, and we want to find an entry to get in. The best way is, like you see, the Fibonacci retracement. The price comes down. We don't know, we don't see this area here yet, but we have a sense that might touch the 23% of the Fibonacci ratio, which is a level of resistance here with the 3 moving average. As you can see, it's formed perfectly with this example here. We can see that we could take this short side here to the downside. Now, if the market considered to be pretty much a little bit strange, and we don't know where the non-farm payroll will come, if it's going to go on the positive or on the negative side, then we can pretty much have a pending order beyond the resistance levels, that if the price do not fulfill our expectations, then the price could go to the upside and enter and hit our pending order to the bullish side. Okay, So the strategy in this has to do with the Fibonacci retracement and with the alligator, that amazing tool that Bill Williams designed. Now let me show you an example, another example, how you can use again the same thing with the Bill Williams and Fibonacci. For example, let's see that this here was the last drop we saw, okay, and now we expect the market to go to the upside. All right, now I'm going to show you that you can also react as resistance levels, so you can pretty much be a little bit careful when you enter. We know that the market could come up from the let's say from the alligator here, but we can also put targets in the Fibonacci levels and take the targets on the Fibonacci levels, because you never know if the market will react to this level, to the downside, or to that level here. So pretty much what you are doing, you form a strategy, meaning that you enter, you take your first target, you take your second target. Here, if it's not going to go to your side, then you might decide to go to the other side because the market reacts to you. So again, this strategy works well here for another time because as you can understand that this strategy is basically formed by professionals and people that know what they are doing. Another thing that you can use for the non-farm payroll, again, another breakout here for the Fibonacci, for the Bill Williams alligator. Again, you can drag your Fibonacci retracement from up to the downside. You don't know this side yet. You take your Fibonacci, you put your entry point here. Maybe you could put here is very, very close. Here it's one target, two, maybe three here. Okay, another one. So as you can see, pretty much you don't need to know where exactly the non-farm payroll will come out. You just have to go with your technicals and see what is going on with technical analysis beforehand, before the event. Okay, another here, let me show you, this is considered to be a little bit more consistent than other strategies. Here, Fibonacci retracement, your entry will be somewhere here, targets, 1, 2, maybe you go all the way up, 3. Okay, so another time this amazing strategy works. Okay, so in essence, guys, you could see that this strategy will make sense when you obviously start working with it more and more. Another one, let me show you another example. Fibonacci retracement here. Here you have your entry. You have maybe this target here, and maybe here this target didn't reach. Okay, you could pretty much go out with this amount of money in your pocket. So guys, again, have in mind that the Fibonacci retracement works well with Bill Williams alligator, which is a trend following system. And here we have Fibonacci retracement, which is basically the retracements of the following trend. Again, entry, take profit, take profit. Okay, pretty much very easy. Obviously, you have to understand that you need to also have your stop losses. So as we understand, the best way for you to have your stop losses somewhere below the alligator last basically support. So again, you can go with the stop loss of that. Another example we can use, you can see we can use a lot of examples here that make sense. Another one, breakout here. Maybe your stop loss will be here. Sorry, wrong line here. Your first target, second target, and so on. So pretty much, guys, your strategy with non-farm payroll in place will come in fruition when you go with the flow, meaning that if you don't know where to enter, maybe you have some sense of the numbers of the non-farm payroll, and then you will justify the numbers with the progression of the trend. Okay, so have in mind that the best solution, according to some analysts, is to combine fundamentals with the technicals. As for this, for example, here the market dropped, break all the levels. So from here and on, we just wait maybe for the price maybe to trade. Okay, so when the NFT comes out, have in mind that you need to follow the rules of the strategy on the technical side and then on the fundamental side. Okay, guys. Now, as for us, you know us, it's we are a brand that is owned basically by KDNA. We are pretty much licensed from Cyprus. We like you to have the best experience. That's why we created these webinars for you guys. This is obviously a short webinar because it's for the NFP, but bear in mind that we generate a lot of webinars for you guys to have the best experience possible. So thank you very much for attending to our webinar for today. Have in mind that your attention. Have in mind that our attention is to you. We want you to have the best possible experience with us. So thank you again once more. Enjoy your Nonfarm tomorrow. Thank you, guys. See you. Bye bye.